In a world of fleeting trends and market madness, one name stands as a titan of timeless wisdom. Warren Buffett, the Oracle of Omaha. A man who turned a childhood fascination with numbers into a global empire worth hundreds of billions. But how did a kid from Nebraska, armed with a paper route and a dream, become the most successful investor in history? This isn't just a story about money, it's a story about vision, discipline, and an unwavering belief in simple, powerful principles. Get ready to uncover the secrets behind Warren Buffett's extraordinary success, from his earliest ventures to the legendary investments that shocked Wall Street and created generations of wealth. And we'll explore the moments that defined him, the deals that made him, and the philosophy that continues to inspire millions. Stay tuned, because you're about to learn how an ordinary boy built an extraordinary legacy. Our story begins in Omaha, Nebraska, August 30th, 1930. Born in the shadow of the Great Depression, young Warren Edward Buffett was different. While other kids played games, Warren was captivated by numbers, by business. His grandfather's grocery store was an early classroom. His father, a stockbroker and later a congressman, instilled a sense of integrity and an early exposure to the world of finance.
The best gift I was ever given was to have the father that I had when I was born. So, in all ways, he was teaching me. He never taught by telling me things. He just taught by example. He had unlimited confidence in me when I screwed up. And that takes you a long, long way.
By age 6, he was buying 6 packs of Coca-Cola from his grandfather's store for 25 cents and selling individual bottles for 5 cents apiece, a tidy profit. At 11, he bought his first stock, 3 shares of City's Service Preferred, for himself and his sister Doris. He even filed his first tax return at age 13, deducting his bicycle and watch as work expense for his paper route. This wasn't just a hobby, it was a calling. A voracious reader, Buffett devoured every book on investing he could find in the Omaha Public Library. One book in particular changed his life, The Intelligent Investor by Benjamin Graham. Graham, a professor at Columbia Business School, became Buffett's mentor, teaching him the core tenets of value investing. The idea of buying stocks for less than their intrinsic worth, like finding a dollar bill selling for 50 cents.
There are half a dozen that had a tremendous influence, and certainly Ben Graham influenced me enormously in terms of giving me the investment framework to go forth. I wouldn't be remotely where I am without Ben Graham.
After Columbia, a brief stint working for Graham Newman Corp., Buffett returned to Omaha. In 1956, with $100 of his own money and about $105,000 from 7 founding partners.
Months after I came back, some members of the family said, "What should we do with our money?" And I said, "Well, I'm not going back in the business of selling stocks, but if you would like to join me in a partnership," I said, "I'll be glad to do it." So within a couple of months after coming back, I set up the first partnership.
He launched Buffett Partnership Limited. This is where he truly began to flex his investing skills, consistently trouncing the Dow Jones average year after year. His letter to his partners became legendary for their clarity, wit, and profound investment insights. Then came a pivotal moment. In 1962, Buffett began investing in a struggling New England textile mill called Berkshire Hathaway. The textile business was dying, but Buffett saw an opportunity.
Part of the partnership was buying what looked like cheap stocks. Berkshire Hathaway looked like a cheap stock. It was a terrible business.
I bought the first shares of Berkshire in 1962, and it was a northern textile business destined to become extinct eventually. And it was a statistically cheap stock in a terrible business. Berkshire Hathaway was closing mills, and as they closed mills, it would free up some capital, and then they would repurchase shares. So I bought some stock with the idea that there would be another tender offer at some point, and we would sell the stock at a modest profit.
By 1965, he had taken control. Most would have tried to revive the failing mill. Buffett, he used its dwindling cash flows as a launchpad to buy into other, better businesses. It was a masterstroke of capital allocation, turning a relic of the past into the vehicle for a future empire. One of Buffett's earliest and most brilliant moves within Berkshire was recognizing the power of the insurance industry. In 1967, he acquired National Indemnity Company, later Geico. It would become a cornerstone. But why insurance? The float. Insurance companies collect premiums up front and pay claims later. This float, billions of dollars, could be invested for Berkshire's benefit, essentially providing a massive, low-cost, long-term source of capital. It was the financial engine that would power decades of growth.
Warren Buffett of Omaha, Nebraska. If you would put $10,000 in 1965 into his company, Berkshire Hathaway, you would have $1 million today.
With Berkshire Hathaway as his canvas and insurance float as his fuel, Warren Buffett embarked on an unparalleled streak of iconic investments. These weren't just financial transactions, they were masterclasses in his investment philosophy. Each one tells a story, a lesson in finding value where others saw none. Let's start with See's Candies, a simple chocolate company, but Buffett saw more. He saw a beloved brand with incredible customer loyalty and pricing power, an economic moat that competitors couldn't easily breach. He paid $25 million. Today, it's generating billions in profits for Berkshire. The lesson, the power of a great brand is priceless. American Express. In the 1960s, the company was rocked by the Salad Oil scandal. Its stock plummeted. Panicked investors fled. But Buffett, he saw a fundamentally strong business, a powerful brand temporarily tarnished. He invested heavily, demanding that margin of safety. The stock roared back. Decades later, it remains a core Berkshire holding. And the lesson, be greedy when others are fearful, especially with strong franchises. He saw enduring value in media with his investment in the Washington Post company during a tough market. Then in 1988, one of his most famous moves, Coca-Cola. After the 1987 market crash, he poured over $1 billion into the beverage giant. He understood its global brand dominance, its simple business model, and the ability to consistently raise prices. It was a bet on product people loved, a company he understood. And overall the lesson, invest in businesses with durable competitive advantages and global appeal. Geico, the auto insurer. Berkshire had owned a piece for years, but in 1996, Buffett bought the rest. He loved its low-cost direct-to-consumer model, a massive competitive advantage. He understood the insurance business inside and out. It became a crown jewel, a profit machine for Berkshire. And overall, the lesson here was to deeply understand the businesses you own.
After what they are already calling Black Friday, it was the worst single-day point loss ever for both exchanges.
Even in the 21st century, Buffett made bold moves. In 2009, during the financial crisis, Berkshire acquired Burlington Northern Santa Railway, a massive all-in bet on the future of the American economy. And then, starting in 2016, a surprise to many, Apple. Buffett, once shy of tech, recognized Apple's incredible brand loyalty.
Warren Buffett's Berkshire Hathaway has taken in a $1 billion stake in Apple. According to a regulatory filing report released today, Berkshire held almost 10 million shares of Apple in its first quarter. The company is possibly betting that the tech giant will rebound after a slowdown in iPhone sales.
Its ecosystem and its status as a consumer product company, not just a tech firm. It became Berkshire's largest single stock holding. And the lesson here? Even legends can adapt and evolve their circle of competence. So what's the secret sauce? What are the timeless principles that underpin this extraordinary success? It's what many call the Buffett Way. At its heart, it's value investing, buying businesses, not stocks. Find companies trading below their true or intrinsic value, and always demand a margin of safety, a discount that protects you if you're wrong. Think long term. Buffett's favorite holding period is forever. He's not interested in quick profits. He lets the power of compounding work its magic over decades. Invest only in what you understand. Stay within your circle of competence. If you can't explain it to a child, don't invest in it. Simple, but incredibly powerful. Look for businesses with durable competitive advantages, economic moats, strong brands, patents, network effects, low-cost operations, things that keep competitors at bay. Invest in companies run by honest, competent, and shareholder-focused managers, people you trust to run a business for your own family. And finally, patience and emotional discipline. Be fearful when others are greedy, and greedy when others are fearful. Resist the urge to follow the herd. These principles didn't just guide investments, they shaped Berkshire Hathaway itself. It's not a typical corporation. A tiny headquarters in Omaha oversees a sprawling empire of diverse businesses. From insurance and railroads to energy, manufacturing, retail, and sees candies, of course. Buffett's approach? Decentralization. Hire the best people, trust them to run their businesses, and get out of their way. The annual Berkshire Hathaway shareholder meeting, dubbed Woodstock for capitalists, became a pilgrimage for tens of thousands of investors. These investors flocked to Omaha not just for financial updates, but for hours of wisdom, wit, and life lessons from Buffett and his longtime partner, Charlie Munger. His annual letters to shareholders are masterpieces of clarity and candor, read by investors worldwide. But Warren Buffett's story transcends the balance sheets. In 2006, he made one of the largest pledges in history, committing the vast majority of his fortunes to the Bill and Melinda Gates Foundation and other family charities. He co-founded the Giving Pledge, encouraging other billionaires to dedicate most of their wealth to charitable causes. For Buffett, wealth was not an end in itself, but a tool to make a difference. His legacy isn't just about the billions he created or the companies built. It's about the wisdom shared, the integrity demonstrated, and the example set. He taught the world that investing can be rational, ethical, and immensely successful without succumbing to the short-term frenzy of Wall Street.
Tonight, one of the greatest and longest running shows in American capitalism is coming to an end. In Omaha, Nebraska, a surprise from Warren Buffett. The 94-year-old spent nearly 3 hours answering questions from investors before revealing his plans to step down as Berkshire Hathaway's CEO.
In May 2025, news broke that Warren Buffett would be stepping down as CEO of Berkshire Hathaway at the end of the year, after an incredible 60 years at the helm.
The time has arrived where Greg should become the chief executive officer of the company at year end, and I want to spring that on the directors effectively and give that as my recommendation.
While he had long prepared for succession with Greg Abel, designated as his successor, the announcement marked the symbolic end of an unparalleled era in American business and investing. The Oracle of Omaha preparing to pass the torch. Berkshire Hathaway was built to last. Its culture of rational capital allocation and decentralized management deeply ingrained. But the absence of Buffett's unique genius, his calming presence during crisis, and his unparalleled ability to communicate complex ideas with simple wisdom will undoubtedly be felt. The world watches to see this next chapter unfold. So what are the enduring lessons from the life and success of Warren Buffett? Read widely, think independently, invest in what you understand, be patient, prioritize value over price, and remember that integrity and a long-term view are your greatest assets. His journey from a paperboy in Omaha to a global icon is a testament to the power of continuous learning, disciplined execution, and an unwavering commitment to one's principles. He showed us that success isn't about complex formulas or risky bets, but about sound judgment, patience, and a deep understanding of human nature and business fundamentals. Warren Buffett, the investor who changed the world, not by chasing trends, but by staying true to timeless truths. A legend whose lessons will echo for generations to come. Thank you for joining us on this journey through the making of a true investing icon. If you've enjoyed this documentary, make sure we subscribe, hit that thumbs up, and get in the comments with your best lesson from Warren Buffett.